Okay, I think I'm on. Give me 1 second here. Okay. Okay, I am on. Let me. I don't think I could do that, huh? Can I just do this? Boom. I don't know if that will work. Might be. So I've been down to just one monitor here, so that's why I had to do it this way. Sorry about that. Appreciate you. Hey, what's up? Okay, this is the only oop. I'm trying to make this a little bit smaller, but I think it might not work. Yeah, so I broke my other monitor, so I had to resort to only one here, so hopefully this will work. Let me double check real quick before I move on. Okay, so I think, yeah, it shows everything. Alright, so hopefully that would work. If not, we will see. Alright, so how is everybody doing today? Work was good, thank you so much, Lionel. That was good. Hopefully you're doing well as well. So, okay, let's see. Alright, so let's do a price update. Obviously, this is a very it's a very slow day for GameStop, but it was pretty interesting. Hey, Northstar, thank you for joining. I feel like this chat is not going to work. You know what? I feel like I need to do this. I wish I to avoid doing this, but seems like it's a better option, I think. Okay, sorry you guys. Give me 1 second here. You might see Ryan Cohen's face with a IE. It's so I'm so used to getting or having two monitor, and this one is tough not having two. Anyway, it's life. All right, so thank you. Monitor. Yeah, I dropped one and it's broken, so I need to figure out what to do. I mean, technically I could still see it, but I don't want to short anything. If anything shorts, like let's say, I don't know, if it's been dropped and the screen is cracked, it's I don't know. They might have some electrical problem, you know. So I'm kind of scared to do anything. Okay, hold on, let me see. Hopefully it looks good. Okay, thank you. I appreciate that. Alright, so let's update the price. Obviously it was a pretty uneventful day, but AMC earning was today, and of course look at the price of GameStop. There's no reason why the price of GameStop goes down right now today. No news whatsoever related to GameStop, but for some reason, you know, it does these things where it kind of mimic what the movement of AMC is, and this is why they are kind of tether these two stock together. But we all know, you know, if you're in GME, you kind of like expected this. So today I kind of scoop up some after hours. I think it's this day right here. Yeah. So thank goodness I could scoop up some my long term, Roth IRA. I was able to kind of make a new Roth IRA. Well, not really new. I had this account for a while, but it's just in a different brokerage. So that's why I'm kind of trying to build that one up on top of the one that I had in the other brokerage, which doesn't allow me to pick up the price. So, which is a bummer. I'm kind of considering kind of transfer that to the one, but I don't want to put all in one basket, so to speak. So kind of want to have at least 2 or 3 different brokerage in order to, I don't know, I'm just paranoid at the moment. Okay, who's here today? North Star, thank you. Appreciate you. Kind of quiet today. I know, right? Hump day. Not much going on. I mean, at work was kind of busy today. A lot of stuff going on at work. But it was a fun day, to say the least. It's just like the running around, stressing out about people coming in. So it's all right though. All in all, it was a fun day to have. Okay, so where do I expect the price to go? Honestly, let me see. I kind of still think that they're gonna try to bring it down to $12 level right here. I don't know who's they or who has the ability to do that. The price, let's just say the price will come down to that. But it seems like this level right here is a kind of hard resistant to break right here. Support to break around there. So that might have something to do with the Fibonacci thingy, right? Who knows? So the golden golden retracement right here, kind of break through that, and it's kind of flip as a support right here, right? Or resistant, I should say. There you go, and then perhaps that's gonna act as a kind of a resistant to bring the price down to 12. So yeah, that's fine. I think earnings is coming, so I don't know. Again, I don't know what the plan is. I don't know why the price comes down. Perhaps it is a shitty company, but I'm here for it. If you think this is a shitty company, okay, all right, sell your share right now if you think that. Will Ryan Cohen give guidance? I don't know, North Star. I mean, I don't care. I mean, if he keeps posting good earnings and good direction, which he has been, I don't care about guidance. Like, again, it's just gibberish. Whatever he could say in the market, and honestly, with the hatred that we have, I'm assuming you're a shareholder as well, with the media relationship between GameStop, Ryan Cohen, and the media, I don't think the media would take kindly, even if he's going to give guidance, right? A good guidance or whatever, they're going to try to twist his word. I remember when he was giving an earnings call, way back, not earnings call, but like as a CEO of the company, he came out and say something about overpaid executive, how he's going to treat company's money as his own, that type of speech. What did the media say? It's like, oh, Ryan Cohen bash corporate America. It's like, no, he's just making a comment that is rightly so, and but again, like, to me, there's a reason why he doesn't come out and give calls, guidance, or whatever, because word could be twisted, and the news media is very good at twisting words. Again, like, I'll go through it, and I feel like Beyond Meat was one that I feel like, oh my God, what is the manipulation here, right? And it's due to the media manipulation in ways that I can't understand it. The only thing that I could explain it is the algorithm, right? And it's set up to be like that. And so again, like I really don't care if that's what you care about. Then don't invest in this company. Like, guidance to me, it's just a fluffy ways of saying nonsense anyway, right? You could just read the balance sheet yourself and try to understand it best you can. And there are people out here, and AMC just had a call, and Moran just did a segment on how manipulative those type of earnings call could be, right? And so I think Ryan Cohen is here to deliver and not fluffing anything up, right? His job is to make the balance sheets better, to make the companies better, to do best to use his knowledge best he can, to increase his value as well, in the company, so to speak. And if you believe in him, I feel like, to me, this is why I'm here. This guy, at the very least, if you don't care about this company, saying that it's a shitty company, or what is it called, a declining company, I would bet on Ryan Cohen to find ways to make this company more revenue and all that stuff. And also too, this is the time to do it. This is a time for him to prove to those people who don't believe him right now that he could do it at the very least, not having to, what's the word I'm trying to say? Like, he doesn't have to give guidance for people to know where the direction is, And I think Moran said it, where, there's so many things or so many ways or reason not to give guidance for. And I know, like, the news media wants to have that, or at least the Wall Street people. But again, eventually people are going to come to this company anyway, because again, if they make money, Wall Street's not going to sit on the sideline. I don't care if he gives guidance or not. The same way with Tesla, right? Tesla doesn't care about, of course, they have a different CEO here, but I think Tesla, on its early days, it's trying to combat the same thing, the same bullcrap, right? The negative sentiments and all that stuff. So it is what it is. But if you've been in this company for a long time, you're kind of very aware of what's going on in the media and how, there's a strategy and all that stuff. So I would be repeating myself if I say anything. Let me say hi to everybody here. Hi Sean, thank you for joining. You don't need guidance, they do. Yeah. Oh crap, what's this? Welcome to the chat. Let's go. Excited for the earnings call. AMC, I don't know. Hey, I'm sure Moran could do an earnings call, and just watch him. You see what the guidance is like. You don't need Ryan Cohen to come out here. He needs every hours to, work on his CEO stuff. Like, don't worry about the guidance. Like, why waste 10 minutes of his life doing that when he could use 10 minutes of his time doing other things that's good for the company, Or enjoy himself, enjoy his family. He needs that 10 minutes with his family. So, give the guy a break. That's how I feel about it, though. Private equity, FTW, I don't know what that means, but welcome to the chat. I don't know who are you, friend or foe, but welcome anyway. Moran's is the truth hammer. He will bash your head with a ball pin hammer for knowledge. Yes, aggressive. Yes, let's try to tame a little bit. Don't bash anybody with the head. But knowledge is good. I think that's a good violent thing to do, but only with knowledge though. Don't nothing physical over here. Name an S&P 500 that doesn't give guidance. I'll wait. Okay. Hey, I don't know. If that's what you care about, then don't be here. Please, it's okay. Don't worry about it. The real expert, not you. Okay. Fake account again. I'm sorry, you guys. Okay, so Marines. Okay, alright. Appreciate that sentiment, but I disagree with you there. The only stock you will ever need in your portfolio. I wouldn't go that far. I mean, I have a lot of GME, so I'm biased, but that's on me. The risk is on me. And whether you want this stock to be in your portfolio or not, that's on you. Okay. If you see the facts, the same facts that I'm seeing, you have the availability of seeing who Ryan Cohen is based on the interview that he did 3 years ago. That's all I need to see, of the guy. And of course, like his Twitter account and all that stuff, and what he done thereafter. I'm sold on that, but if you're not sold on that, that's on you. Then don't be in this company, right? Because you're gonna pull your hair out because you're gonna be like, oh, there's no guidance. He's not talking to me. He's not giving me anything. Why? It's like, oh, he's a shitty person, shitty CEO, right? You know what I thought about too? When people saying that, and it's kind of like a drawn similarity when I used to hear the media cover Elon Musk, right? It's like, oh, he's a wild CEO. We want that. We don't want this type of people to, invest in companies that has a wild, unpredictable CEO. Look, he's going there smoking weed on Joe Rogan and all that stuff, right? That has nothing to do with the company whatsoever, but they attacked him like that, right? And again, like a concerted effort to put Tesla as a company down when Tesla is like posting good quarters after quarters, increase in revenue and all that stuff. Again, this is at the height of Tesla here too. Or in the beginning stage of Tesla as well. So you could go out and research those old media coverage when it comes to Tesla. I found one when it was IPO'd, and Jim Cramer was like, oh, don't hold this for a long term. This is a trading stock if you want to capture the run, but don't hold it for long term. It's like, and then we all know what's going on. But yeah, I mean, again, I'm a biased person here when it comes to, investing in GameStop. But if you hate this CEO, hate this company, don't pay attention to it, right? Don't click on this video. Go away, You're not going to convince me, well, unless you have some facts and figures that I need to look at. That would be appreciative. So you can convince me, but just give me the numbers that you're looking at, and why did you think this company is going bankrupt, for example, right? Because that's what everybody is telling you. And also too, if you only look at one metric to go by to say this company is declining based on the revenue, then I think you don't look at the whole picture here. You might miss a little bit here, in my opinion anyway. But oh my goodness, there's so many people over here. Curtis, GameStop backward is stop game. Okay. Thank you. Dang, that question got you shook. Okay, what you mean? I'm shook. What you mean? That the company doesn't give guidance? Maybe the inflection of my voice. I'm just nervous. I'm just a nervous individual. My baseline is nervousness. Okay, not about the company. Obviously, I need to learn. When there's so many people in the chat, I tend to get nervous, and new people too. I don't know who you are. And so, hey, whatever. Curtis, welcome to America. Are you Canadian? No, I'm not. I do know a lot of Canadians. No, not a lot. Just one, my mom's friend. So that's all I know. And I know Ryan Cohen. Ryan Cohen is a good Canadian, I think. So thank you for asking, though. Is Twitter your main source of stock research? No. But I appreciate that sentiment, though. Is this the Curtis that comes to Moran's show and make a fool of yourself? Is this the same Curtis? Okay. Pretty sure we're all North Americans. Ryan Cohen is Canadian. Yes, I know that. His brother Kai's from Turkish. I don't know what that country is. I'm sorry. I apologize. Holden, you are Maple Ape. Okay. Sorry, you guys. I'm not used to all these people here. Okay. I'm just gonna skip Shields team assemble. Okay. Forward guidance. Good job. Okay. Yes, foolish. Curtis. Okay. I love Kavana more than anything in the world. Okay, thank you. Well, good luck with that stock there. More than Beyond Meat. Okay. Alright, so let me get to the show real quick. I know I got distracted with the thing. Okay, so I had a couple things to kind of go through. Now, the title is not for GameStop, so it's kind of clickbait-ish. I think maybe that's why all the GameStop haters are in here. What I was wrong about is Bitcoin. So I thought it was going to come down at around $50,000, right? I was wrong on that. Sold around $46,000 because I was expecting it to come down. But I think, again, it's like due to the ETF, the BlackRock ETF. I think the inflow was just, so egregiously high. That's what I heard. But again, like I'm still waiting on that $30,000 level in order to accumulate then. But yeah, I mean, hey. So the all-time high was 68,000, right? Is that what I had there? Hold on, let me see. Oof, man, look at that run. And also too, I think it has to do with the fear of rate hike, lower rate, and all that stuff too. Inflation is kind of sticky. Of course, that sentiment is going to send any commodity higher, right? And also too, the news has been pumping it like crazy. What I've noticed too, like they didn't pump Bitcoin over here, right? You should have been accumulating it over here. But yeah, I mean, it could reach the all-time high and then kind of do a consolidation here. But I think the run is still there. Honestly, too, look at this OBV. So it means like people are accumulating. Look at that, like it's straight up. It's almost kind of similar to some of the stock that I look at. Hold on, let me see the OBV real quick. Again, like this might be different than a stock, so I don't know how the OBV is being calculated here. But if you look at the accumulation, it's just like straight up, right? And even with this sell-off, it doesn't drop that much, the volume, on balance volume. And so now it's turning back up. So yeah, or I don't know. So case in point, don't listen to me. I was wrong in Bitcoin price movement. Actually, my brother told me that it was going to go up, and I was disagree with him. vehemently. Should have listened to him though, but I hope he benefited from this a little bit. So my brother is trying to learn to trade as well, and he's learning to read all the chart and all that stuff. So kudos to him. So let's see what else. Yeah, so the all-time high is about to it's like what is it, $68,000. Yeah, so I don't know if it's gonna break through that, again. I'm kind of worried that it might and then I'm gonna miss out on this, but I don't think so. So the halvening is coming. My thought about that is that the Bitcoin miner is gonna want to sell in order to create some liquidity or capital in order to usher to the new environment in which energy price is going to go higher, right? So they're going to try to capitalize on this run as much as they can before it drop in price, because when the halvening's happening, yes, the supply is going to be lower. If the demand is higher than the supply, obviously the price is going to go up in terms of Bitcoin. But the miners themselves, they are going to, I think, have a tough time unless they have the money from the investor rather than the operational on Bitcoin, so to speak. So I haven't taken a look at the Bitcoin balance sheet, like Mara riots and all that stuff yet. I should. I mean, the reason why I don't look into it is because I'm not in Bitcoin at the moment, so that's why I'm not too antsy on those type of companies yet, but I should take a look at it and see what's going on here. So if you look at the Mara right there, you see the revenue is kind of coming down right here, and the net income is negative, right? So I don't know when the next one is going to be, but it, of course, it's a strong buy, right? Now that BlackRock got into it, stand to benefit so much, so therefore they've been pumping the Bitcoin and all that stuff. The Bitcoin, like, really? The Bitcoin? Sorry. Okay, so let's see. Yeah, so if you look at the right here, so they've been kind of like operationally doing okay. At least the trend is going the right direction here, but I mean, I imagine, like, again, this is kind of hinge on the fact that the Bitcoin prices might not cover the operational costs here, right here. So operational expenses, see, for some reason last year, this is a trailing 12, by the way, so last year was $700 million just to operate this company, and then now it's lower. So I don't know what the dynamic of that is, but all I know is Bitcoin miners mine Bitcoins, right? And at some point they're gonna rely on the price of Bitcoin to go up, and when it goes up, usually they sell. That's my logic here. Maybe I'm wrong on that. So when they sell the supply of whether it's over the counter to all this BlackRock entity, and of course if BlackRock has more supply on their hand, they could manipulate the price down as well, because institution, they are notorious for that type of thing. When gold and silver has ETF, it seems like the price is just do an unexpected things, right? People are notorious to say that silver was going to squeeze at some point, because it makes no sense that silver price would be this low. If you look at the price of silver, I know I'm kind of off tangent here today, you guys. I know the chat is going crazy here. I'll pay attention to it in a minute here. All over the place. Okay, silver future, I don't even know. Again, I haven't looked at the price of silver, but yeah, look at this. If you look at a long-term one, so this is a monthly. Wait, is there a better chart that dated back to? The whole point is like it's a commodity, right? So if Bitcoin is, digital commodity, then it's fair to kind of compare that. So again, it's not the same thing. I realize that, but before anybody's type in the chat, she's so dumb. Okay, calm down. You might be right, but calm down. Yeah, people. Like sometimes people online just amaze me sometimes, like how are you like that in real life? Like if you talk to people like that in real life, God bless you, because that's not the way to get people attention here, or to get people to listen to you even. So just I don't even know which one is the best one where I could see the price from the 1800 or something. Okay, let's try this one. 1800, what the hell? How long is it? Wow, so this one is only going back to 2016. Huh. It would be interesting to see the one. But anyway. That is so weird, you guys. I'm sorry. You know what? I give up. It's not important anyway. If you're not investing in silver or whatever. I'll look into it later. I'm kind of off tangent here. So my point is that eventually these entity, whoever mined the Bitcoin is going to need to sell in order to keep the company alive, right? Because they cannot operate in this environment where net income is not going to cover even. So see cash flow negative for ever in this environment here. So eventually they're going to have to need money, dilute shareholder more and more in order to, keep the company afloat. So let me take a look at some thing here. I'm looking for retaining loss, you guys. So bear with me here real quick. I just want to see what the retaining loss is so far. Okay, so throughout the life of this company, it's not too bad for a company of this size, but at the very least they have positive shareholder equity. That's good. But the retaining loss is $800 million. Yee, right? We don't want to see that, obviously. So I'm looking at goodwill. Goodwill's not too bad, $15 million. So what I usually do is just subtract goodwill from the shareholder equity. At the very least, they increased shareholder equity by $500 million right there. That's a good sign, right? And this is a trailing 12, so that's a good. And I'm not knocking on this at all. But if the price keep going up and up, I feel like they're gonna feel the need to sell in order to lock in that profit, right? And so, yeah, I mean it's good. And I hope what do they need? Let me look at the CapEx real quick. So cap expenditure is usually where you want to see how much they need for that 12 months in order to survive that year. At least that's how I read it anyway. So see, cap expenditure is they need $400 million to operate, to okay, let's look at the definition so we're clear on this. Cap expenditure are also called payment for property, plant, and equipment. So yeah, you need property, plant, and equipment in order to operate. the business, right? It measures cash spent on long-term asset that will be used to run the business. Okay, so this is more long-term. Okay, so generally we want the cash flow to be more than CapEx. So currently the cash flow, free cash flow, is lower. And more importantly, you want this operating cash flow to be higher than the CapEx even. So that's when you get a positive cash flow. So currently they have a really low, really low, a very steeped, cash flow loss here. So that's not a good sign. So that's why I'm expecting them to sell off their Bitcoin or raise more money from shareholder, right? And so that's the dangerous part. And on top of that, the energy price might go up. Like, cost of living's going up and everything is my insurance just go up like crazy, my car insurance. So, yeah, it's going to be expensive there. Anyway, I'm babbling too much there on companies that it's not related to GameStop at all. So I know I'm a GameStop investor and I'm talking about other company here. I'm sorry. I'm apologizing profusely. But before I go to GameStop here, let's look at the Beyond Meat BS, right? I think it's BS, but hey, congratulations if you bought Beyond Meat 5 days ago. So apparently Beyond Meat, I haven't taken a look at the balance sheets. We're gonna take a look at it together here. But apparently the revenue has soared, or the expectation of revenue has soared. I don't know. Thanks overseas growth. So they sell more stuff, I guess. We'll take a look at it together. So sales decline from a year earlier. Okay, so they decline. So I'm not much of a reader. I'm better at looking at this right here. Hopefully the financial is already there. So let me check real quick. Okay. See, it makes no sense at all. Hold on 1 second, you guys. Is this the recent one? I feel like... what is the ticker? BYND. BYND. Gross negative. I saw that one. That was so funny. DRS Jimmy. I know, right? It's ridiculous. Hold on, let me verify real quick because I thought they had an earnings just recently. Am I wrong? See, 10Q? I think it's 10Q. Okay. I think it's this one, no? 10Q report. Okay. What is this? Sorry, you guys. This is the most boring live stream ever. I apologize for GameStop haters out there. What? What was the news about then? Like, if that's the case, that they don't even... So this is the most recent one. Is this the guidance that they're needing? Aye. So, okay, extraction. Okay, stream interpretation, percentile. S&P 500 publish. Sorry, you guys, I'm skimming through this a little bit here. US PSU. It's like a performance share. Automated holiday. I'm expecting like a. Sorry, words doesn't do much for me, so that's why I like to look at the numbers, you guys. Just how my brain works, because words, it takes me times to kind of go through that before I so I apologize. I feel like this is not even the most recent one. You know what, let's just go through this real quick. Okay, it seems like this one is the most recent one here. Okay, so it didn't register just now. Okay, so let's get through this one. Of course, okay, revenue's up 8%. Ooh, my goodness, that's like a good one. I'm sure Winthrop loved this company because revenue's up by 8%, you guys. That's a good thing. Look at that. Operation costs, okay, operation expenses down by 50%. That's pretty good. No, okay, at least they could do that. Cost of revenue went up. Cost, even though they're operating expenses going down, that's a good thing. I'm not knocking this at all. Okay, so operating income still in the negative. They still come down close to $50 million net loss. I mean, they lost less. I guess they are trending in the right direction, but is it worn a 60% jump because of that? That's what I'm talking about here, you know. Look at the free cash flow. Free cash flow is way up. And yeah, so this is the type of the company that Winthrop would love, right? Winthrop, you're here? I saw you earlier. So because revenue went up, right? This is why I think the algorithm got picked up. That's why the algorithm trade. Oh wait, hold on. Sorry. I am so sorry, you guys. I just realized this is not even Beyond Meat. Yes, I am dumb. I'm so sorry. My bad. I apologize to the world out there. Just listen to this. Oh my goodness. Okay, Beyond Meat. This is Beyond Meat. Ay. That was embarrassing. I'm so sorry. I'm so sorry. I crack myself up sometimes. Alright, so let's go to Beyond Meat here. So I can't find the most recent one right here. Okay, so revenue's down by 20%. Okay. But again, this is September though. Okay. I'm trying to find the reason why it went up like 60% 3 days ago. Right? I mean, it's still like, again, massively company that lose money here, right? With the new one, I'm sure they probably improve a little bit, maybe. That's why. Okay, so shareholder equity went down in value. So far, they lost about close to $1 billion in the company history. So the most recent earnings might not be that. Perhaps they could make more. Is that the whole point? But yeah, so they were up 30% at some point. I'm still cracking up on that was a terrible mistake, you guys. I am so sorry. Do not listen to me. So sell all your GameStop right now. No, of course not. Okay. Alright, I'll read the chat later. I saw a lot of be more invest better here. Okay, so yeah, I mean, so if you look at the price right here, the last 5 days it spiked up like crazy. So I'm trying to find the reason why. So for the last 3 months of quarter three, right here, Plant-based has reported net loss though. Like they report net loss, but for some reason the price shot up by 80%, right? The net revenue, okay, $83 million, no, $73 million net revenue. Okay, am I misreading this? Sale declined by 7.8 from a year earlier, but was higher than expected. Oh, was higher than Wall Street? Really? Wall Street expectation for this company to lose money? And that's the reason why it went up like 80%? Makes no damn sense, right? Perhaps it's short interest, right? I've heard people explain about that. Maybe it's over egregiously shorted by somebody. I don't know. That could be verified. Hold on, let me see. Short interest. I'm looking for short interest right here. Okay, close to 40%. Maybe that's the whole point. That's why it shot up like that. Who knows? But did they actually have a good earnings though? But really? So because they Wall Street expect them to lose more than they do, and the stock just go up like crazy. I wonder why GameStop doesn't have the same price movement. I mean, look, they've been beating expectation for four consecutive quarter, and nothing about the price, right? Again, who moves the market here? Who moves? Do you think this is a retail investor moving, Beyond Meat price to like 30%? I think they want it to run. Somebody wants this to run, or the algorithm just go crazy, berserk. That's the only explanation I have. Of course, I'm speculating on this, whatever, Again, it makes no damn sense. Okay, so, this is 7 hours ago, so let's listen together, and let me go through the chat real quick too, so while you're listening to this, perhaps.
Time for today's Three Stock Lunch, where we take a look at three big movers of the day. Here with our trades is Ava Ottos, CIO of ER Shares. And first up, Ava, welcome. Second up, United Health, down today. U.S. has launched an antitrust probe into that company. What's your trade on the giant of healthcare?
This is a giant. It's a $500 billion diversified health services company, and it's in the eye of a storm. On the one hand, the U.S. Justice Department issued an antitrust investigation on them, and they recently faced a cyber attack from the well-known ransomware group known as Black Cat. So even though they have a revenue growth that's above average, in fact, it's 50% above average, their valuation is also 50% above the category. So given their relatively high valuation and the risk overhead they're now facing, and I think that's definitely a sell because the cost benefit here is not justified.
Okay, and it's interesting. Up next is eBay. The stock is on the rise after it did report its results after the bell. This one I do find very interesting for a lot of reasons. It's in the online space, but obviously deals with a lot of resale, refurbished type items. What do you think about this one? It did also, we should note, hike its dividend by 2 cents, announced a $2 billion buyback program as well. So what's your trade for eBay?
eBay, I think it's a hold. We need to mention that they are having a good day today after beating guidance expectations. But this is a company that over the last 10 years has not seen a margin improvement. In fact, even though their valuation is 1/3 below its peers, its net income margin is 27% compared to -7% for its peers. Its revenue growth is less than half its peers. And over the last 10 years, the company is down by 40%. We think it's it's on a downward path. We don't believe things are changing anytime soon, and there are better options in this category. We believe investors should not look any further than Amazon in this case.
What's their fundamental problem, Ava?
So their fundamental problem is that their net income margin. So their net, even though their net income margin is improving and it's up 27% compared to 7% for its peers, its revenue growth, they're not growing as fast as the other competitors. There are other competitors they're taking away market share from them. Amazon has economies of scale. No one can compete with Amazon. At the end of the day, I think they're going to lose the race. We already have signs. I don't see how eBay will ever win over Amazon. So I don't know why investors would choose eBay over Amazon in this case.
All right, let's move on to Beyond Meat. Shares are soaring as that company tops quarterly revenue estimates, announces plans for steep cost cuts this year. Your trade on Beyond Meat, Ava.
It's beyond me why investors would ever invest in this company. In the best case scenario, that's a short-term hold. I would say like even a 1-day hold or a 2-day hold, if not a sell. So their sales, general, and administrative costs have doubled in the last 4 years. Their gross margin went from positive 34% to negative 24%, and the debt has skyrocketed by 17 times from 10% to 173% in the last 4 years. So we are seeing costs skyrocketing, debt is skyrocketing, margins are plummeting. I don't see why investors would be in this company. Today they're having a great day, but I think that's a short squeeze. 1/3 of the shares outstanding are short. So in the best case scenario, short-term hold.
Okay, sorry about that. I was just skimming through the chat here. So I'm not going to read through all of that, but there's a couple people trying to be cheeky and all that stuff. But one thing that caught my eye on all of that was Best Buy's earning is tomorrow. And then one other one that is more productive than anything is it doesn't matter what you're looking at, learn to trade. So I have an opinion on that one. Well, to me, I learned how to trade already. I'm not good at it. So I'm sure if you're good at it, you could make money on it. To me, I'm more of a long-term investor and looking at the long-term value of a company that I believe in, right? And the reason why I did that is because, again, I have my conviction, in a certain things that I learn about, right? And it just so happened to be GameStop right now. Now, if you think I'm dumb in doing that, then okay, that's fine. It's, the only time could tell with that. So I look at the investor like, a lot of people who believe in a certain leadership, right? Like Jeff Bezos, for example, like Elon Musk, for example. All of those things are, again, like it's long term. Like if you invest in Tesla back when it was $10 a share, you'd be a billionaire by now, not billionaire. Back then, and held it until now, you would be well to do, right? Rather than trading in and out. Again, if you're a trader and you're good at it, do it. For me, I'm not good at it. That's why I learned to have a different strategy for myself, right? So, and if you have the brain capacity to be a good trader, do it. I'm not knocking you. Go ahead, trade it. Trade Beyond Meat right now. For all I care, right? For me, a dollar cost averaging is an immensely, it benefited me. That's why I'm here, to tell people that. But again, I have a long time horizon than most. So, I know that most people don't have 30 years to cash out on this thing. So you might have to wait that long. I don't know. So it's possible. Do I think I have to wait until I'm 60 in order to cash out of GameStop? I doubt it, but I'm willing to bet that. See what I mean? So it's a matter of where you are at in life and how can you learn to do things. Like, again, there's tons of video out there tons of traders out there that will teach you how to do that. I'm just not one of them, right? So that's that. I'm just gonna skip through, some comments here, so I apologize. So that's one. And then you said Best Buy's earnings tomorrow. Okay, that's interesting. I would be looking into that one tomorrow. I don't know. I don't even know if I'm going to be out here tomorrow. I have a couple of things I have to do tomorrow. So let's see. Yeah, so it'll be interesting to see what the electronics is, the gaming. I think they just got rid of their physical game thing, so perhaps that's going to be beneficial to GameStop. Again, yeah, if you're not a physical type of person, you're going to come out here and say, company's going under, and all that stuff. Yeah, I've heard it before, but I'm here for the real number here. If they could still take advantage of the physical versus digital, I think if anybody could do it, it would be Ryan Cohen, right? Love Best Buy, Beyond Meat grows, profit margin grows to negative. Yes, amazing. I saw that one. Withdraw, maybe you will figure out. Who are you? He doesn't, he does the graveyard shift. Sorry, I'm gonna skip through some of this. They under promise and over deliver. Oh, okay. Who? Beyond Meat? Okay. Alright. Well, good luck. Good luck for that. He wants to go. I don't know what that means. Sorry. You okay? You're Jimmy people. You're okay. You're Jimmy people. Okay. Thanks. I know it's the name of a toy train. What are you? I don't know what that means. Sorry. Tyler Perry. Sorry. Pack a lunch. I love. Yeah, that was good coverage there. So I'm kind of happy that she said it's just like not a company to buy into. I was expecting the opposite actually. But again, hey, I'm just biased about this particular network in general. So again, not everything they say is a lie. Not everything they say is the truth. You have to look into the company in which they are telling you to buy into yourself, right? And that's what I'm here for, is to advocate people to look into the facts first before believing any of these people coming in, including me. Don't believe me. I mean, I was wrong just now, looking at the different company thinking it was Beyond Meat. And so, whatever company that they're telling you to sell, buy, or whatever, just be cautious on that, right? So if you look at the price targets right here, at least there are 3 different price points right here that the analysts out there, 5 of them telling you to look for, right? Of course, right now it's a sale, right? Okay, one company that I think they're right on that, right? But they still give you a high and low and whatever. The only company that they don't give anything is is GameStop, right? And again, they could say, oh, it's because the CEO doesn't give guidance, so therefore we're not going to cover it. Okay, that's fair, sure, okay. But really, only company that gives guidance get coverage? All right, let's play that game. How long can you stay non-coverage? How long can you not cover a company that's doing better, have good cash on hand, has no debt, has all of it, all of those juicy, let me see, all of the stat in the world that Beyond Meat, that beyond any company that most company don't have this stat, Okay, that's what I'm trying to say to you. Now, yes, there are some things that you need to iron out, right? All of these need to be ironed out. And I'm sure within a month or so, we're going to see this number a lot better. The fact that they only lose close to $800 per employee there, that's doable, right? You could cut more stores there. And of course, the news is going to be like, look, they're cutting stores again, blah, 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 right? Without looking at anything else. That's going to be the news that's going to run over and over again, saying GameStop is dying, right? And all that stuff. But look at this, right? You have revenue, billions of dollars right there. You go look at it for yourself, right? Again, there was a talking head there. Yesterday I showed it. If you want to look at that live stream, you're welcome to. If not, that's fine. You know, some people was like, there was one person, they were like, I don't know who you are. You're probably still here. That if I don't read all of the hate comments, I won't have anything to talk about. Like, there's tons to talk about this company, right? Just look at the news coverage. But anyway, there were one person who wanted you to buy into Dollar General, said that the cost of revenue for GameStop went up. When if you look at the balance sheets alone, you would see that that is not true, right? So there's a concerted effort out there to misinform you about this company. That's why I'm here for. I mean, the fact that they could lower the operating expenses, that's good, right? The fact that he's not taking any salary, that's like the good thing too. It's like he's trying to demonstrate to you that if the company doesn't make money, then the CEO doesn't deserve to make money yet. Yes, salary and all that stuff, like $250,000 a year, that's sufficient to stay alive in this economy. The fruit of labor should come from the shareholder, or share value increasing, right? And that's what he's trying to do in this environment in which we're living in here, in the high inflation, high cost of labor, everything going up, right, for no apparent reason. Apparently, that's what we've been told. Never mind the fact that we've been bailing out banks like crazy. Never mind that we've been bailing out Wall Street for decades on end, right? Because we allow so many people to get away with skimming off the top, so to speak, right? Conspiracy minded, sure, whatever. But I love this company. Like, the reason why, look at this, like 4 quarters in a row that we're cash flow positive, and people are trying to paint this company to be like a declining, right? How is it that they're able to achieve free cash flow this much, right, in this past year, while everybody else are struggling, right? You know why? Because we've been cutting. We've been doing the right thing when people are not watching, right? I mean, come on. I mean, what more can I tell you about this company? And also, too, look, the gross profit margin went up by 3%. That is massive, and people don't want to cover that. Okay, that's fine. Remain to be seen. You could also see that the fact that net loss is only $8 million. So what more can you ask for this company right now? Trailing 12. This is a trailing 12. Again, more comprehensive than the 9-month that they're trying to paint the company to lose $56 million the first 9 months of this particular year. And so there's a reason why they use that number, because it's more of a loss than a trailing 12 months, which is $8 million for this company of this size. And so if you think I'm dumb for believing or seeing this and saying that it's a good company, I don't know what else to tell you, man, right? Unless next quarter they're gonna post some outrageous loss here, perhaps going back to like $100 million loss, then okay, I might reevaluate my position here. But as far as the company itself, it's doing well. And they're doing that without any more dilution, right? Of course, there's some people out here would love you to say, oh, Ryan Cohen dilute shareholder. Well, there's only one dilution. And so, hey, 5 million shares for a $1.6 billion, that's a pretty good deal. And ever since then, we've been doing well with that money, right? Without going back to shareholder. And so, as a shareholder too, if you don't like that, then okay, get out, Guidance, really? Do I really need guidance to see this for myself? No, I don't need guidance. So also too, like you see, with just the percentage, I want you to take a look at the percentage here. Look, from here to here. That's only what? 1 point something percent? Makes a huge difference here. And I want you to understand this. The percentage is much better than the actual dollar amount, because one percentage, remember I show you my last live stream was about this ex-Goldman Sachs trader out there who does look into the fundamental of things, and he was explaining, like, people are not looking into the gross profit margin increase or profit margin increase the right way, or they're not cover it enough. If you could find a company that increased their profit margin by 0.1%, I'm not talking about whole percentage here. It's 0 point something. That 0.1%, it's a good efficiency. Like it means that you're finding efficiency in the market, that the company has found something great. Look at this, from 0.8 to 4.4%. That's whole percentage, and that's why look, it went from 52% to $255 million with just not 1%, like 3%. And so that means that this company has been doing the right things. Like, again, yes, we need to iron a whole bunch of things, but still, we have done immensely. With the store being closed, close to half of the company being closed. And so that means they're finally doing the right thing, right? And getting ready to not only survive in this harsh environment, but also thrive years to come, right? So all we have to do is just survive this environment right here. High interest rate, real estate market is going nuts right now, right? Lower price and all that stuff too. And here's what people don't really think about, right? I just watched recently about McDonald's, like how McDonald's was actually not in a fast food business. They're actually a real estate business, right? They're collecting rent. Technically, Gamestop could gear themselves up to be a real estate business too. Watch. I'm sure Ryan Cohen have an eye on those harshly discounted, commercial buildings of sorts, right? Because now we're a holding company, right? We could do that, and we have the money to do it. Like, the potential is so large, and people don't see it. But anyway, so again, like, hey, a girl could dream, right? I'm just dumb and maybe uninformed on that, whether it's hard to do or not. But the reason why McDonald's hasn't been affected by this, high cost of labor, they're actually passing it on to the storeholder, right? The store manager, people who, again, like, if you want to run McDonald's, again, I don't know for sure here, so do your own research here. I just watched one video about it, but apparently they would collect 20% loyalty, and they own the real estate that these business owners run on. So that's how they justify charging 20%. So that they call that rent, right? So corporate get 20% of whatever the revenue is, right? And whatever leftovers would be the store owner. So in some cases, depends on the area and all that stuff. For a $3 million revenue stores, the owner actually gets to make the net profit for the store owner comes out to be $200 something thousand for the whole year. And so that's or a whole quarter, right? Really depends on which store you get, though. If that's a whole year. So my point is that they only get to make a portion of that, 10% of that, or even less, right? Depends on the cost of labor. And so my point is that companies like GameStop could technically do the same thing. Now, I don't know if they want to franchise it like McDonald's or anything like that, but they could pivot to that as well. Not quite sure how the electronic would do that, or how logistic, what kind of logistic nightmare present for that particular route. But my point is that there's so many avenues that they could go about doing that. You see what I mean? Okay, let me, when working in the day is done, oh girl, what the hell? People, alright, somebody singing, hump day, there's a bull market somewhere, and Xvid will help you find it. Okay. Hey, that's fine. I'm just focused on GameStop right now because I'm trying to accumulate as much shares as I can. Really don't care about the run of other stocks that I'm not worried. I mean, yes, I own, let me see, right now I'm looking at more safer thing, like, oh my god, bond, oh my goodness, the what is it, 10 years, oh my goodness, 10-year treasury bond. I feel like that's probably a safe havens right now, or even the long-term bond thing. To me, I think that the Fed's gonna be forced to lower rate at some point, right? Because again, banks cannot withstand these even 5.5%. But again, there's been talked about how Jerome's might increase one more basis point instead of decrease, because the market has been pricing rate cut already, 7 rate cuts, right? From what I heard. And so if Jerome Powell is gonna not cut rate this coming March, we're gonna see something unexpected, right? So the volume's gonna kind of cascading down. Or the bubble just keep going. Who knows? Like, it makes no sense at all, this market. Okay, do you think more GameStop open in the future? Summer higher interest rate would actually be better for GameStop because they own over. Yes, I agree with that. As far as in the future, yes, but not currently. I think currently they're trying to cut more stores because it's much better, because again, cost of labor is going higher, and so it makes sense to consolidate, and strategically place GameStop store so that it covers the whole area. And I'm sure, Moran's had a whole segment about that, so if you want to be curious about that. But I think not the nearest future. I feel like perhaps they're going to expand more in the fulfillment center than that. And I think if they do, they're gonna buy it outright instead of renting it, right? Because they have the money to. Like, there's no reason to rent something when you could pay for it cash. And high environment, like you said, you're spot on there. Higher rate is actually good for GameStop. And even lower rate is actually good for GameStop too. You know why? Because they could deploy that, capital in many other ways. Or finally, borrow more at a lower rate, and then expand the company more effectively, right? With a higher profit margin, right? I really think that he's going to try to cut at least down to 3,000 store instead, and he want to see how would that play out, right? So this is why he doesn't cut all at once, right? Like, imagine if we see a headline saying GameStop cut half of its store right away, right? Just like Bed Bath & Beyond. I don't know if you've been in Bed Bath & Beyond before. Remember, they were cutting half of their store immediately, right? And this is what caused the panic. And also, too, they had to, right? While GameStop is not like that. GameStop has methodically, slowly cutting down stores' front in order to, again, calibrate, right? We're trying to see how many store we could cut every quarters in order to make it make sense in the environment that we're in. Because again, like if you do it too quickly, it could cause a sentiment that we're desperate for cash or whatever, right? That's why. But again, I think leadership is doing great, so I'm not worried about that at all. As long as we'll keep posting this type of cash flow positive, that's what I'm looking for. As far as retaining loss, yes, we still have to watch out for that one. I'm hoping this quarter we could wipe this out, but that would be a dream, right? A dream. The reason why I think we could is because, again, it's fourth quarter, right? Fourth quarter is notorious for at least adding. Like, if you look at this, right? Look, from here to here, that's $90 million or so, right? And that was last year. Think about the inflationary number, right? Think about how many more money we get to keep now because the expenses is lower, right? So it's not far-fetched at all that we're going to impose $100 million plus net, right? So that's like low expectation for me. So I'm trying to do this math right here so you could see it together. Oh, okay. Wrong math. See, terrible. Oh, so dumb, right? So that's $77 million. Sorry about that. So from here to here is 77. So what am I doing there? I'm just trying to kind of predict, right? So from here to here, this is the fourth quarter of last year. So from here to the next one, that's what I'm trying to predict here. So yeah, I mean, I think that we're gonna do $30 million more than last year, but that's a little bit ambitious, right, for most people. But hey, fourth quarter has historically been higher earnings than the 3 quarters that we've been having there. Let's see. So if you look at the inventory too, right, from last year, we decrease. So this is quarter 3, going to quarter 4, quarter 3, going to quarter 4. If you look at that, we decrease our inventory by $100 million right there, right? And keep in mind too, we bought some marketable security as well. So if you look at that, see, from here to here, we increased by 70 something million dollars, right? You look at that right there real quick. I just want to see the difference here. Again, like, we're not losing per se, we're just using that money to buy marketable security. We all know what's been happening to the interest rate lately. And so that's beneficial for the company. I don't know why people keep knocking that. It's like, what? Like, duh. You wouldn't want to sit on cash and then not at least get some. What am I doing here? Sorry, I'm trying to figure out what the difference between. So that's $62 million right there. Yeah. And so they could have slowed that down and put only, 50 million, right? But they've been kind of accumulating. What do I think Brian Cohen could do too? I'm sure he's going to increase some of that more. Really depends on what the Fed's going to do, whether they're increasing rate or he expecting the rate to be the same, whatnot. But the idea is that we have the money to operate this company for technically forever, right? Because we haven't been burning that much cash lately. That's bullish in my opinion. At least they have the runway here. Remember Peter Lynch, right? Talking about how the turnaround company, Morantz did a whole show about that. So go look for that one if you haven't watched it already. It tells you what Peter Lynch think about a turnaround company, and I think this is a great turnaround company that you want to keep an eye on. At the very least, put it on the watch list, right? In my opinion, it's a good one. Of course, I'm biased, right? I bought into it at a higher price, but yeah, that's neither here nor there. I'm here to present you facts here, right there. Like I said, doesn't matter if you buy into it. Like, it doesn't affect me in one bit, right? I don't move the stock. Institution will, and I think if Brian Cohen could prove to them that he could make this company profitable one full year, they're gonna come flocking, right? Just my opinion here. And again, he doesn't need to give you guidance. If he could post this right here, oof, you guys, come on. It's like if we could go back to that, back into the 18, even $3 million net. Imagine that. Hold on, one second. Let me look at the 3 million a bit. Okay, so look at the profit margin for this one. See, look, and this is another thing that people don't realize. So look at this. So way back when, they only have profit margin less than what Brian Cohen could achieve right now, right? And this is what matter, not the revenue and all that stuff, because we could scale this. Look at this. So this is the profit margin. What is the highest that we ever gotten? Right there. So you see that line right there? If you trace it back, the highest is 4.28. 4.28. Oh, right here. 4.3. That's the highest. Okay. 4.3. Remember that number. 4.3. Let me try to find it. Oh, 4.35. Okay. 4.35. So that's the highest. And when was that? 4.35. 2016. You could say, hey, that was the height of GameStop. They're making billions of dollars, like, $9 billion at that time. But the profit margin was 4.35, okay? So what is this right here? So this one, I was like misreading this one. Okay, let me go back. I think I read the wrong line, you guys. I'm sorry. Again, see, don't listen to me. Go look for it yourself. Okay, so cash flow. That's what I was looking at. Cash flow, I'm looking for the highest ratio. Okay, let's look at this together. Highest ratio it ever looked for. Cash flow, cash flow. Okay, so 8%. So we need to go back to 8%. But that only translates to 3.4. Oh no, 3. So cash flow is not all that. But we want this though. We want this. Okay. So let's go back to profit margin. So we want it to reach 4.35. That's a good one. Okay, so 4.35. That was profit margin. So currently we are at 0.14. So if we could, go make it so that we could go back to at least 4%, that's good, right? And in order to do that, we need to either make more or cut down the store cost of goods and services, right? Those are the only two things that we could do right now in this environment. And since we couldn't, the revenue went down, we need to cut more, right? In order to be profitable. Yes, you could cut to profitability here. Unlike what, the news source is telling you, and it's evidence right here, we did cut and it's more profitable. Oh, we lose less. That's indicative of profitability right there. $100 million here and there may not seem all that much to you, but if you look at a yearly basis compared to last year, it's a lot. $500 million, that's a lot of swing right there. Just so you know. And within that same time frame, we were able to, 300 million there. Or cut down $300 million worth of cost of revenue right there, right? And then the same for the expenses right there. Yeah. So again, efficiency in the company has been found by Ryan Cohen here. Do we have earnings date yet? I think I heard Moran said it. I think Moran's would know a lot more than me. But 19 for now. 19. Inventory should drop $300 million from quarter 3 to quarter 4. Oh wow. Do we know? Do we know that for sure? So that means we sell more goods, right? Okay, if you look at inventory real quick, right? So you're saying that, okay, so from here to here, what is that? Like if they sell the same thing, right? So here we go. Okay, so last year they were able to decrease inventory by this. But that's from, that's quarter 1 right there. No, quarter 4 earnings. So from quarter 3 to quarter 4, they were able to do this much. Or decrease inventory by that much. Can I use this number to figure out the units of sales here? That might be my next project right there. Yeah, it's fun, you guys. Like, to me, this is fun for me to look into because it's my investment here. I'm planning to retire on this company. I might be wrong. Hey, it's just me. looking into this. But hey, I believe in the leadership more than the balance sheet itself. But I like the fact that the company has done the right thing so far, in my opinion, right? Why do I think that? Well, shareholder equity is positive, right? They paid off senior notes. Shares the same, right? Like the class of share Ryan Cohen bought into the same class of share that you own, you and I own. It's hard to find companies that's sweet, right? Because there's no senior notes, there's no other, preferred equity units or whatever, like AMC has. There's no apes, there's no nothing, nada, right? Whoever wants to buy into it, it's going to buy into the same class of shares that you and I have. So that's what I like about it. I don't know, in the future it might be different, but currently there's no signs that he's going to do anything like that. He's here to deliver. I don't know how long it's going to take him, though, because again, negative sentiment of this particular company is very hard to shake. You got news like this, right? GameStop shares registered biggest decline in 2 months. And a one-day session down 8.6%. News like this is going to scare some people there, and of course, like, embolden people to be like, this is terrible, this is that. 5 weeks ago, we battled these shutting down of the NFT marketplace, saying Ryan Cohen doesn't know what he's doing and all that stuff. So this narrative needs to be ironed out. In my opinion, it might drag the price of GameStop, or at least keep it flat for at least the whole year. It's gonna make it sound, and the news is gonna be like making it sound like, this company is not a buy. Stay away from it. If it runs, it's just going to be that, Reddit, or maybe it's the meme coin and all that stuff, right? So whatever narrative that they are painting this company, it's tough to kind of change hearts and minds of people, but it's slow grind here. That's why it's so valuable, because when the company is being egregiously, the other way, you might want to take a look at that, because that might be the things that they don't want to accumulate right now, right? And again, this institution has done this for decades, you guys. Like, they're doing it on Bitcoin right now, right? Oh wow, $62 million, $62,000. But again, like, you don't hear about how BlackRock was accumulating at this point, right? Larry Fink was famously saying that, we changed our thesis on Bitcoin a couple years ago, right? So I'm sure he's accumulating at this price point right here. And so the news didn't tell you that, right, until the ETF. This is the ETF news right here. ETF. New brokes right there around that time. That's when you hear about Bitcoin ETF was approved and all that stuff, right? And so news is there to get you to be antsy, getting you to be a trader rather than long-term investor here. Because again, unless you are good at trading, good at looking chart, good at doing those kind of learn about it, right? Price movement and all that stuff. And even then, I've never heard of a trader who are a billionaire, right? I only heard about investors that are billionaires here. So that's the difference. Of course, investing, it takes a long time for you to accumulate that massive amount of wealth. And, unless you get good at picking the right stock, the right sentiment, the right time, the right cycle, all of that. And that's why, big institution out there, they move cycle, cyclically. So, there are times when you should be buying into bonds. There are times when you should be buying into equity, right? Currently, since equity, are egregiously overvalued, the S&P 500 here. I think, seeing the news of Jeff Bezos selling, Mark Zuckerberg selling, JP Diamond selling, that is scary to me, right? That means, again, those people seem to know a lot more. And the fact that Jeff Bezos too, like the largest, company that has your data, what you buy, what you sell, all of that sell off of his company, that is huge, right? Meaning that he knows all the data about the economy. That's the idea anyway. But I don't buy the fact that we're going to be in a bull cycle here. Otherwise, why would he sell? Right? Why all of these CEOs are selling like crazy? I mean, billions of dollars. Like, people probably arguing like, they have hundreds of millions of shares here. But hey, maybe there's a reason why he can't sell it all at once, right? So he needs some money here. That's why he did it. Alright guys, it seems like the chat is slowing down and I am kind of pooped out myself. So I think I'm gonna sign out here. But I apologize about earlier, you guys. I misread Beyond Meat. It's still not up yet. It seems like, it's being summarized here. So you could Google it for yourself or look for the information yourself here. But it seems like a company that doesn't, again, like they have close to $1 billion lost here. So there's no reason for it to run 80% in one day. So yeah, I think I got a good company here. Just only time would tell. One other thing too that I noticed just now here, it seems like, you see this OBV on volume right here. So this hit a diversion here. Not sure if that means anything. Price come down while the volume, on balance volume, goes up. Boom. Done, right? Not sure what it means, like I said, but that's the anomaly there. Means that people are buying this company. Wonder what's the volume here. 2.4 million shares being shorted. I'm sorry, 2.4 million shares being traded. I haven't looked at the chart exchange today. So before I let you go, let's look at this together. Sorry, you guys. Okay, shorted volume. This is my favorite thing to look at. Okay, so currently 52 million shares volume being shorted. Today, volume reported is 1.6. Off exchange, close to 500,000 shares there and 10,000. So seems like it's creeping back up again to the tens of thousands of shares that are exempt. So are those naked shorted? I don't know. can't prove that. But the fact that it went up close to 10,000 there, I don't know. Concerted effort to bring the price down, I don't know. But I like to see that it's less than 60%, right? If you look at the grand scheme of things right here, used to be even more egregious, like 76% shorted share, right? But this volume over here. So I don't know. Again, doesn't make any sense to me. But yeah, look, over half of it is off exchange somewhere. So crime? I don't know. It's allowed, sure, right? But how long can it go on like that before the price appreciation, right? So let's look at the option chain. So again, the earnings. Let's go the week of earnings right there. If you look at the max pain is 14, so it might still be at 14 for a while until that change. But there's a 10,000 contract at $20 right there. There is a support level for March 15 right there. 4,000 contract right there at $13. So it might bounce off of $13. Who knows? If that option is in the money, it might bring down the price a little bit too. So for April 19, max pain is 15. And there's a huge open interest right here. Close to 10,000 contract right there on $20. 5,000 contract. Looks like there's more support in the $10 range. 15,000 put right there. So there's more downturn right here. So I don't know if it's in the money, right? If it pulled down to $13 right there, it might cascade down to 10. So just be prepared for that. That's on April. Again, rate hike might be expected, so the whole market might come down because of that. And I've talked about this before. If the SPY comes down, people panicking, you might experience that drop for GameStop as well. A temporary drop, in my opinion, right? But this one is a long dated one, but let's look at January 25. See what that is. Okay, so January 25, you see a lot of open interest on the $60 call. A lot, $3 put right there. Not much. Okay, in the money. So yeah, they might just. Oh look, max pain right now is at $13 for the option dated, long-term option dated. Okay, and then the 2 more years is $15 max pain. Yeah, again, this could change at moment's notice, right? When people are buying into this, usually they, really don't care the price fluctuation. And so when people are more interested in this, usually they want to speculate, hey, there's no way that GameStop is going to stay at $15. So they're willing to pay $500 for this one contract, right? That they're willing to bet that, right? So in order for people who buy it right now at $500 a contract, the stock price has to go up to $20 in order to break even, right? And at least you have 2 years to hold on to this contract, that it's not expired. Now if it hits this $17 price, right, your contract might be worth something at that point, but it's still less than what you paid for. So ideally you want it to reach $20. That's the only way you could get break even. Now if it goes over $20 in 2 years, you're gonna stand to benefit that. Anything up top here, you're gonna stand to benefit, but only if it's above $20. That's the nature of call option, is that yes, you only pay $500 to get a hold on to a share of GameStop, 100 shares of GameStop, but the price has to go over $20. So that's how call option works. I hope that makes sense for those who still here. Okay, so I'll just let the stream go. Again, I might not be in tomorrow. We'll see though. It depends on how quick I could do the things that I do. So, alright. Thank you, everyone. Okay, bye.